Hi everyone, welcome back to the series of 10 impossible stocks for 2019. There's been a gap because the market has really gone up since the year began over here. So just a little bit of picking the moment to announce stock number 8 and 9 that we look forward going into 2019 for our impossible portfolios. Now, so let's do a quick recap of our current position so far. Now, so these are our top 10 stocks for 2019 since we're beginning the series itself. So AT&T is still about par, and we're down a little bit on ExxonMobil, Cardinal Health, and Qualcomm. All right, but we're doing well on Tyson Foods, and we're also down a little bit on Altria, and up a little bit on Noel Brands over here. Now, so which two stocks will I be adding in tonight's video over here for our series of 2019 stocks? So let's take a look over here. Now, so the first stock I want to cover today is really something that some of you may hear or may not hear about, and that's a very industrial-like company in Aerosmith. Now, so if you're familiar with Aerosmith is probably one of the most industrial-based companies with really a boring set of businesses that few really notice about over here. Now, but if you do know what they do, their specialty is really in water heaters and boilers over here. And that pretty much is their main industry of business over here. Now, so Aerosmith remains the most dominant in the US market. That's where they've begun, and they've remained really, really strong over there because they have actually built up the largest, pardon the spelling error, the largest wholesale distribution network over here, spanning over 100 years being in business. Now, so it also ties up with Lowe's, Home Depot, and Ace Hardware, which is more familiar to countries in Asia, especially Malaysia itself, where you have Ace Hardware stores. And these stores over here carries its brand, and it's being sold to both retail as well as commercial sectors. Now, so recently the stocks has been really depressed. We have the stock coming off a really high price level into a new low over here. And these are really down to three factors over here. The first one is really about Trump policies. And Trump policies over here on tariffs, and tariffs mainly on steel over here, which is a production material that is used to make water heaters and boilers. So this pretty much increases the cost of the companies in manufacturing, and of course that leads to lower profitability, or what is expected. Now, next is of course a slowing US economy, because we have noticed that the housing market has started to kind of take a dip over here after a really good run in the last couple of years. So this again boils down to affecting the outlook of profits that the company is about to make. And the last one is really, again, back to Trump with the trade war that's ongoing between US and China. Because actually few know about this, but over the last few years, Aerosmith has steadily grown their market share in China over here. And right now, the sales revenue in China represents about 30% of the sales revenue that the company makes as a whole. So that's really pretty much a big market share in terms of the revenue that the company makes. So the trade war isn't going to help with the sentiments of the company as well. So all this has led to pressured stock prices on Aerosmith, and this is where we actually can stand to benefit over here. Because in the stock market, we all know this, a lot of investors are short-term in nature, which means upfront news and short-term news affects their sentiments, and it actually leads them to make decisions that are not ideal in the long run over here. Now, so all these temporary worries that is present in the company should actually bode well for the recovery of AOS stock prices coming in 2019 itself. So when market rides over these concerns and it looks into that they're basically looking into currently with this company, we expect Aerosmith stock prices to quickly recover over here and do really, really well in 2019, because this is really an exposure play into China markets and a growth sector in a very industrial-like company. Now, so going forward, as we can see the financial statements of Aerosmith over here, Aerosmith is really showing strong improving revenue and operating margins over the last 5 years. As you can see, from 2012 onwards, you can see a sharp increase over here pardon me, in the revenues that the company is making, which is actually a very, very good sign, despite the depressed stock prices that we are seeing currently. Now, so for these various reasons that are listed in the presentation, we do expect a good upside in AOS stock movement after a difficult end to 2018, and this will make up stock number 8 for our portfolio over here, going into, if I'm not wrong today, let me check the date, Today is the 23rd of January, the first month of 2019. So markets are still currently in a very volatile stage, a corrective stage over here, but we continue to focus on companies. They're doing really well and provide good value, all right, in our very unique IMP methodologies of seeking out good companies, the easy way. All right, now, so this is stock number 8. Let's go to the next stock that I want to cover in tonight's recording as well. Now, so I'm going to go for stock number 9 right now, and stock number 9 I'm going to share tonight with all of you about going into 2019 has been a company that we have traded a lot for a couple of years now, and that's General Mills. Right now, so the reasons are as follows. General Mills is one defensive stock that we really look up to load up into our portfolio to prepare for a more defensive year in the markets amidst recessional worries that's now clouding the markets itself as a whole. Now, so if you're worried about recession, General Mills has been a company that has always showed strong performance, even during the last 3 recession periods that the US has experienced over here. All right, pardon the spelling error again. Now, so current sell-off presents a lot of undervalued situations and scenarios for this company. All right, when even the markets do continue to do well, all right, we can actually see the stock price recover. All right, so it doesn't really just mean that we are positioning ourselves for a recession in the markets, but we are also really positioning for a low risk entry on a company's stock price who has been depressed. So if valuations were to meet more on a fair value basis, the price would actually recover as well, and we stand to benefit from that. So the current risk that's putting the prices down over here is also the worries about a successful integration of a company that they've just acquired, which is called Blue Buffalo over here. All right, and they've taken on some additional debt to actually make this acquisition happen. So that's a worry that is clouding a lot of share investors' judgment on the company itself at the moment as well. Now, but at these low valuation prices over here on a very simple company that deals with food and packaged foods over here, with a long history of corporate strength, it again allows us to take a low risk positioning for our entire portfolio going into 2019 over here. Now, so let's take a look. General Mills. All right, this is as of today, 23rd of January. So the stock price is closed at 43.24 the last night, and at current prices, it actually provides a dividend return of 4.56% over here, just holding on to the stock for the next 1 year. So even if the stock goes nowhere for the next 1 year, you still stand to make a return of 4.56% just on dividends that you receive from the company alone. All right, next part over here. If you look at the 52-week range that's on the left-hand side of the panel over here, you actually see that the stock, based on current prices, is still trading amongst the low for the year itself. And if prices do return to the high of around $60 level, that's actually a good profit that we actually stand to look at over here very quickly. Now, this is the financial statements for General Mills. So company has shown a decline in 2016 and all the way to 2018. All right, from the years before that, where it's actually experiencing growth. So this is the part whereby it spooked investors over here as it tries to re-energize the portfolio of brands it holds and try to monetize them and get more profitable all over again. All right, by looking at the trailing 12 months result, it seems like things are improving over here, and let's hope the company can continue to steer it in the right direction, and everything will work out fine then, and you'll see the stock prices quickly recover from its current prices. Now, so using our stock filters, our models over here, so GIS presents currently very moderate and safe valuation levels for our 5-year money trail filters, and on a 1-year price filter trail over here, they provide actually really good value in both yellow zones and green zones over here. Now, so this forms our thesis over here for going into General Mills as one of the stocks for 2019 in our impossible portfolio that we are building over here. Now, so for these reasons listed in the presentation, we actually believe that GIS is a good stock that we can profit from in 2019. So this is going to be our stock number 9 in tonight's video, and as well going into the first month of 2019. Now, so this is what I have to cover over here for tonight's video and session, which is our stock number 8, Aerosmith, and number 9, General Mills. All right, and if you do enjoy this video and you're still currently right here viewing this video right now, thank you very much. I hope you enjoy it. Do leave a comment with any videos, ideas that you'd like me to cover on topics over here, on stock selections or anything like that, and how you can be a profitable investor, a very, very simple and layman way, and pick the right stocks all the time. Now, So do subscribe to my channel if you want to know more about the stocks that we'll be picking and forming in our portfolio, as well as general market updates that we'll be doing in series over here throughout the year. And yes, thank you very much for viewing this video, and I look forward to meeting you in my next video over here, where I'm going to wrap things up and cover stock number 10 for 2019. Alright, this is the end of the video. Thank you very much for watching this video over here. I hope you benefited from the information that I shared. So this is Terence Tan, going to sign off over here as the Impossible Investor. So I will see you in my upcoming Impossible Investor apprenticeship or introduction sessions in 2019, where I can show you more about how you can turn yourself into a profitable investor moving forward in 2019 and the years after that. Alright, have a good lovely night over here. See ya.